welcome to today's Teachable Moments. And what I've got in front of you guys is a message that I got up from one of our traders here at Trading Price earlier this morning about what a bull trap is. So in this Teachable Moment, I'm reviewing her level, and I'm also going over what a bull trap is and how we can look at resistance and supply differently so we know where side of the trade that we can take. So hopefully you guys enjoy this. All right, good morning, traders. Sierra, I figured the best way to probably answer your question is to just bring up your chart and kind of show you. Now, there are a lot of definitions out there on what a bull trap is, but essentially the way that I use this term is when I'm looking at support and resistance versus supply and demand. So I've got your chart up right here, and we go drop, base, drop. Again, I mentioned some comments here on the level itself. It's an okay level. It's not a bad level. I would like to see the strength of the move quite a bit more. But when I look at what we're talking about here as on a bull trap, you see this 38, 37 to 38.40 area. Boom, 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 boom. This is what is in trader language called resistance. Okay, a lot of people trade off resistance, and they don't understand what we understand here at Trading Price. Is there's a very big difference between resistance and supply. And so what a bull trap is if price comes up here and it rallies up, and you start, if you're above 60 on RSI and you're coming up to this 38, 35, 38, 40 area, and you breach this high, this is considered, again, resistance in, nominal trading books and things of that nature. If you breach that high, you'll see a run up in price because everyone that was a seller here, there's no more sellers after this resistance gets passed up. So what happens is a bull trap can occur, which is price comes up here and it kind of fizzles, buying and selling exists, and then bam, you get this explosion upwards where people are like, okay, resistance was broken, I'm gonna buy, and they're buying right into an area of supply. And that is a really, really good opportunity for us to get short as traders. The only thing that I would look at a bit more further on this is I'd look at the Dow, the Russell, and the NASDAQ as well to see if there's a better level. It's not that this is a bad level. We go drop, base, drop. Couple issues that I have with it is we don't breach even the first previous low, let alone down here. But secondarily, we kind of have this leg out and then one expanded range candle before we go sideways. So the strength of the move away, it's weak for me, and if I have a weak move away in strength, it's kind of indicative that imbalance might not be there that we require for a supply zone to exist. So if we did breach above this and I was going to take this level, it'd be a very small trade, relative to the account size and relative to the other positions. Especially, and I wouldn't take it if it was above 60 because it's not something that works for me here on the S&P. Now, on the Dow and the NASDAQ and the Russell, it might work better as price comes back into it. So hopefully we addressed, what is a bull trap, and we talked about this level a bit more, but I really like what you've been doing lately, Sierra, as far as finding high quality areas and practicing on that. You're going through the journaling process. You're talking to yourself about it. I can see those notes. That's what it's going to take to be successful. So you keep doing what you're doing, girl. With that, you can always find us on YouTube, of course. Hit a subscribe link if you'd like to find out more videos about this and how I'm reviewing levels and how I'm trading and what I'm looking at and things of that nature. And as always, you can find us on Facebook and at tradingprice.com and our 8-week futures accelerator course. All right, guys, take it easy.